Alright, it's been a while since I actually recorded because I just came back from my vacation with my family. Alright, so there's a lot that actually happened during the time away, so I'm going to be trying to catch up to a lot of the things that I actually missed out. First of all, let's talk about Tesla earnings because that's one of the most important ones. And along the way, I might be uploading a little bit more than usual depending on how it goes. Because there's actually a lot that happened. Okay, but I think Tesla earnings is something that I really need to talk about because, like I said in one of my previous videos, I talked about how I actually got into Tesla. Afterwards, I actually sold off half of it because a lot of them actually made a lot of money from it. And then I just got set on the rest of the leftover Tesla shares, which I happened to sell off a number of it. And I am starting to even build a short position on Tesla with another one of my portfolio. But I'll give you more about that later on. Okay, let's go into the earnings first of all. Alright, so earnings over here you can see gross margin, okay, from last year to this year, quarter to quarter, my bad. Okay, from quarter to quarter you can see that the gross margin actually went down. Okay, however, when the gross margin went down, you can see that the revenues actually went up. Personally, I'm not a big fan of margin going down, but after which I do think that, you know, for revenue to actually be spiking up quite substantially as well, it is quite good. Okay, you can see that revenues is up 37%. Of course, ultimately we were expecting it to be up by about 50% or so, but that didn't happen. Hold on, let me just make this slightly bigger. Okay. So yeah, we expected revenue to be up by about 50% or so, but ended up being at about 37% or so. So a little bit of a miss, not gonna lie, because then again, us having an expectation of 50% was because Elon Musk actually brought it out in the, I think the third quarter of 2021. I think that was when Elon Musk actually said it, where he think that Tesla will go 50% revenue year over year for the next few years to go. So according to him, we are expected to get a 50%, but we did. Okay, but of course, at the same time, you do have to also take into consideration that, you know, with the whole Shanghai factory closing down, we have the whole pandemic situation, we have supply chain issues. Even then, they are able to get 37% on revenues. I think that's pretty good. Okay, no complaints over here. Next up, I want to look at free cash flow. I think free cash flow is very important. Over here, you can see, okay, they actually went down on free cash flow. Okay, the previous quarter they got $3.3 billion. For this quarter, they got $1.4 billion. A huge decrease, but at the same time, it was also because of the new gigafactories that they were building. Hence why the free cash flow actually went down. But even then, you have to also take into consideration $1.4 billion is also a pretty healthy cash flow for them. Okay, I'm not going to be complaining about a $1.4 billion cash flow. Okay, like, let's be honest here. You can see over here they got $621 million in the previous quarter, and for this quarter, despite having such a big drop, it's still at $1.4 billion. I think it's totally fine. And let's not forget that because although they have a free cash flow decrease of about 50% or so, we have to also look into the amount of inventory that they actually have, because how it actually works for car companies in general, once they sell off their inventory, they get back the money again. So that's how you kind of have to put that hand in hand. Okay, so I'm going to move on over to here. Okay, this is kind of just the year over year, 51% revenue, gross profit 53%. Okay, over here I want to just move past all this first so you can get back to do it later on. Okay, over here you can see global vehicle inventory days of supply. Okay, we are up to about 13 days of supply right now, which is pretty huge. Okay, for us to actually get to about 13 days of supply, effectively, if you were to actually sell off all these 13 days of global vehicle inventory, I would imagine that your free cash flow is kind of going back to where it was again. So I'm not that concerned. I think that free cash flow as it is, people are saying that the free cash flow is a huge issue. I'm not that worried as it is. Okay, now let's go back a little bit. Okay, over here, 37% year over year in quarter 4. Growth in vehicle deliveries, I think we already talked about that in the previous delivery report. Growth in other parts of the business, increase in the ASP year over year, excluding the foreign exchange impact, including favorable impact of model and regional mix, negative FX impact of $1.4 billion. Okay, so yeah. I think for Tesla wise, because they mainly deal in America, but the thing is that because of the whole global demand for the cars itself, you cannot really be selling all your cars in USD. For example, in Singapore, you are going to be dealing in Singapore dollars. If you're in China, you're going to be dealing in yuan. In Japan, you're going to be dealing in yen and things like that. Okay, so you're not going to be getting the best currency at all transaction. And because of that, they're down about like $1.4 billion in terms of foreign exchange impact. Okay, profitability-wise, growth in ASP, the vehicle deliveries up, gross profit growth in other parts of the business. Okay, FSD revenue recognition of $324 million in automotive sales. Okay, I want to talk more about FSD actually. Okay, so for people who are unaware of why I think Tesla would actually be super duper good in the long term. Short term, maybe not, but in the super duper long term, I think the FSD is going to destroy the whole entire automobile scene. Okay, because at a certain point in time, Tesla can actually just sell all their cars for free or like for $1 and then just hike up all the money into the FSD itself. Because FSD is going to come at a zero cost to them, because once they actually get the technology behind it, once they actually get the servers behind it, they don't really have much of a cost. Okay, and they are able to easily bottleneck the whole entire market because no one else is doing it. And according to the earnings call where Elon Musk actually came out to say, the second place is not even anywhere close to Tesla at the moment in terms of FSD. And which is why it kind of made me think, it's like, at some point you can actually imagine Tesla just saying that, you know what, our Model 3, okay, maybe not Model 3, maybe they're going to create a new model. For example, let's call it the Model 1, okay, the cheapest model that they can come up with, okay. A Model 1 that costs $20,000 straight to consumer, $20,000, and up to you if you want to get the FSD or not. Chances are people are going to get it just for the FSD, okay? And then $20,000, they might make, I don't know, like maybe 2% or 3% from the margin, the profit margin of creating that vehicle. FSD, on the other hand, is going to create like 500, 600% gross margin on the other end. Okay, I think the FSD is definitely going to be a game changer for Tesla without a doubt. Okay, so definitely good to look at this, starting to see a recognition of FSD revenue. Okay, lower stock-based compensation and payroll tax expense related to CEO awards, yada yada. I think these are all kind of meh. Okay, okay. Now let's move on. Total deliveries, 405,000 vehicles. I think this was already talked about in the delivery video as well. So I think this is pretty good. I think this is a very, very healthy increase as it is. 31% year over year increase in terms of delivery. So I ain't complaining, but of course Tesla bears would think that they want to see 50% and things like that. Which at some point I guess I kind of do want to see Tesla go up in delivery as well. I'm not sure if it's going to come out as a demand issue. I don't think it is. So yeah, we'll see how they actually go. Total production up about 47%. Yada yada. Let's see. All right, let's move forward down to the outlook. Okay, the outlook. I'm a big fan of this because they're talking about how they intend to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding in the early 2021. In some years we may grow faster and some we may grow slower. Talking about this current quarter, depending on the number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR. With around 1.8 million cars for the year. Okay, so this is huge. Okay, because right now we are currently at about 37%. Okay, and they are expecting for 2023 for us to actually be over 37%. So we can easily be in like the 50, 52, even 60% region for 2023. However, I do think that I don't want to be like this that person, but I'm a little bit afraid that when Tesla says things like that, or when Elon says things like that, we might see another selling happening. Especially on Twitter side, they're actually going through another round of funding. They are trying to fund up to I think $3 billion or so in order to keep Twitter afloat. So that's kind of like one of my concerns as well. Okay, so I don't know. I'm really hoping that this isn't the case, which is also one of the reasons why I went short a little bit, but I'll go into that more in a bit. Okay, let's finish up this earnings report before I get into that. Okay, like over here you can see cash. We will manage the business such that we maintain a strong balance sheet during this uncertain period. Like I said before, they already take into consideration that, you know, we definitely need to have more money on hand rather than anything else, which is why I think $1.4 billion for free cash flow, perfectly fine. Okay, over here you can see Cybertruck remains on track to begin production later this year at Giga, Texas. Big fan of this. I think this is one of the biggest part. For people who are unaware, why Cybertruck is so important to the whole entire industry is because Cybertrucks, okay, trucks in general, actually take up a huge percentage of the automobiles on the road in a lot of countries. People who are doing deliveries, people are actually doing it for work, people who are actually using it as mode of transport. Trucks in general takes up, if I'm not mistaken, I think it's about like 40% of all the automobile or 50% of all the automobile on the road. Okay, or at least that's the case for in America. Not sure about all the rest of the world, but yeah, trucks definitely do play a big part. And I think with a Cybertruck actually coming in, it actually gives people the flexibility to be like, oh, you know what, maybe I like Tesla, but I kind of still want a truck. You know, Tesla don't really have a truck. Now Tesla have a truck. Hey, you kind of don't really have a way for you to actually get yourself out of it. Okay, so I'm a big fan of that. All right, now let's talk about why I'm shorting Tesla. Okay, first of all, full transparency, I still have I have 30 stocks, I have 30 shares left in Tesla. That's in my main portfolio. I sold off a huge chunk of it at 170, I guess. I think about 170 or so. And then in my short portfolio, which is in my other account, I actually went short on Tesla. I think I have about 60 shares short on Tesla. So effectively, I am net short on Tesla right now. Okay, my net short on Tesla, I actually sold Tesla at about 179. Okay, I sold at 179 because I thought that $180 is the huge resistance. I'm not sure if it's going to buy me the ass. I'm not sure. Okay, but I short a lot of Tesla at that point. I got into margin just to short it. So, you know, if I suddenly cry that I got margin called, you know that Tesla actually went to the moon. But I'm not sure how that's going to be working out. I would most likely be closing off my short if Tesla were to hit about like 158, 155-ish. Most likely that's where I'm looking at. But, you know, if Tesla intend to go all the way up to like 180, I'm most likely going to just close off the short. I don't really care. Okay, but like I said before, I don't think that Tesla going up all the way to like 180 was natural. Okay, despite having this sort of a earnings report, a lot of time we expect this sort of earning report to actually perform badly in terms of market price. So when I was reading the whole entire report when I was in South Korea, I was thinking to myself, why is it going up so much? It doesn't really make sense for Tesla to go up that much. Okay, there's no one particular item, one particular line that makes me think that, oh, you know what, Tesla is going to go crazy in the short term. And by short term, I mean like tomorrow. Okay, nothing made sense back then. Okay, so when that happened, I was like thinking, yeah, I don't see why Tesla would actually go up that high. And that was one of the huge reasons why I started to short in my other account. Okay, but completely a short-term play. I wanna preface this very, very clearly. This is a completely short-term play. I don't intend to hold on to this short for like a month or something stupid like that. If it actually stays at about like 160, I'm gonna clock out at 160. That sort of thing. It was just a quick trade sort of thing for myself. So yeah, I just want to make this clear for you guys. Okay. But anyway, that's all I have for this video. Thank you so much for watching, and I'll see you guys in the next one. Bye.